A stock turns irresistibly hot when the perfect storm of momentum, volume, and market conviction builds pressure just right. It starts with a fresh catalyst that draws institutional money flowing in deep, swelling buy-side interest until shares thrust upward with real force. Volume spikes on the breakout confirm the move is genuine, not just a tease. Technical indicators set the stage first as price rides up to key resistance levels before penetrating them with conviction, while RSI climbs into overbought territory where the real heat intensifies. Fundamentals add fuel through accelerating earnings, expanding margins, or powerful sector tailwinds that leave investors breathless. When retail enthusiasm joins and short interest creates a squeeze, the stock moves beyond teasing into explosive gains. The hottest names do not simply rise. They throb with potential until the upward release feels inevitable. Some of the hottest stocks in market history became scorching because the crowd finally recognized the buildup that had been forming beneath the surface. Tesla rode the electric vehicle revolution with strong conviction as production ramps and battery breakthroughs pushed the share price higher on consistent delivery beats quarter after quarter. Institutional money poured in deep, while the narrative kept momentum pulsing higher and higher. NVIDIA captured the same intensity during the AI boom, as demand for chips exploded and earnings repeatedly surprised to the upside. The stock rode powerful upward legs into triple-digit gains as data center spending deepened far beyond expectations. Amazon, in its early growth phase, created a similar effect through e-commerce dominance that built an ever-widening moat. Once the market grasped the scale, shares broke out and compounded returns that rewarded early believers handsomely. What made these stocks truly hot was perfect timing combined with undeniable growth catalysts, innovation that created scarcity, and sentiment that built pressure until the breakout became unstoppable. History repeats the pattern: quiet accumulation followed by sudden, powerful momentum. To catch the next hot stock before everyone else feels the heat, watch for specific signals while the setup is still coiling tight. Price action should tease a major moving average crossover, especially the golden cross between the 50-day and 200-day lines that signals a serious uptrend is forming. Volume provides the clearest confirmation as it swells on up days and dries up on pullbacks, showing smart money is already positioned. RSI rising above 60 with room left to run, along with MACD lines crossing upward, mark the early pulses of building strength. On the fundamental side, seek accelerating revenue growth, margin expansion, and a clear upcoming catalyst, such as a major product launch or favorable regulatory shift. Rising institutional ownership week after week and short interest above 10% raise the chance of a powerful squeeze. Sector rotation adds another layer as capital flows into previously overlooked groups and leading names show strong relative strength. Patience and close observation are essential so that when the conditions align perfectly, the opportunity to enter becomes obvious. The greatest benefit of hot stocks comes from the way they reward investors who enter at the right moment and ride the full wave of upside. Once momentum takes hold, capital compounds rapidly through sustained price appreciation, as each earnings beat drives shares higher. Returns on investment accelerate as the valuation multiple expands with swelling sentiment, often delivering double-digit or triple-digit gains while the broader market moves sideways. Any dividends serve as additional reward on an already strong move, but the primary climax arrives through capital gains that can be realized or reinvested into the next opportunity. Proper position sizing and disciplined stop losses protect against downside while allowing participation in the complete run. Hot stocks demonstrate a core market principle: entering when pressure is building, holding through natural volatility, and exiting only when momentum begins to ease leads to consistent outperformance. Applied repeatedly, this approach turns returns into powerful compounding growth that makes ordinary investments feel far less satisfying by comparison.